Now, on Thursday, our governor, or the governor of the Reserve Bank, Mr. Kganyago, dropped interest rate by 0.25%, which is something that is great, right? But so many of the people understand the good and don't understand what the bad side of interest rates going down, right? I mean, there's the bad side of interest rates going down. I mean, it's always good to see, of course, people in terms of their repayments being able to pay lower premiums for their loans, for their bonds, for their credit card repayments because of interest rates going down. I mean, in as much as it is a very good thing to happen to a country, there is also the flip side or the back side of the coin, which we'll discuss on this channel right now. I mean, today we are breaking down exactly how falling interest rates impact your savings, your debts, your spending power. Stick around. This could save you 1,000, or this could definitely take you to the next level. But of course, before we dig deep, please note that this is not financial advice. All I say on this channel are just my opinions. If you seek PR advice, you already know what to do, and that is you need to go and consult the professionals. And welcome yet again. I welcome you to this video. I hope you enjoy the content that I have in store for you. Without wasting any more of your time, number one, like I said, the drop, or the 0.25% of the interest rate cut by the Reserve Bank, is going to obviously make our repayments on the loans that we have, credit card loans, car loans, and home loans that we have, the repayment is going to go down, which is something that it's good, because then it increases our buying power. The buying power of obviously us going to spend more on other stuff, it gets to be increased, because look, there are those people that we cannot ignore. People, we are struggling sometimes, or we tend to struggle with debt, and some of the debts are choking us, and therefore a drop in interest rates brings a relief that enables us to be able to do some of the other things that we could not do before the interest rate drop. So it is always good, or this is the first thing that, of course, we can say it's a positive thing of interest rates going down, which is absolutely great and amazing. Now, that is all good, it's all great, but here's the flip side of the coin, which is the bad side of interest rates going down. Now, those people that are saving their money into the bank, of course, savings, or the amount of returns that you were getting on your savings, gets to come down, because the interest that the bank pay you gets to shrink, because even their, of course, interest that they are getting to wherever they are saving their money, it's also getting down, or it's being adjusted, because look, they are not making that much from interest, because the loans that you are paying, or the repayments on your loans have come down, are going to come down, therefore making the banks not being able to make a lot of money, which obviously it will also make sense that on your savings account, whatever interest they were giving you, they also decrease or bring them down, which means that as a saver right now, I think it is always good that you look for ways to invest your money, because saving, of course, it's only good if you are doing it for emergencies or for a short term, which we have discussed on this channel. So obviously the interest that you were getting on your savings account, on the 30 days notice account, fixed deposit account, it's going to obviously go down, or will be adjusted accordingly to this 0.25 interest rate drop. Oh, now, number three, for the stock market, right? This is very positive. Interest rates dropping for a stock market, it's a very good thing, because companies that we invest in, or companies that we buy shares in, when they want to loan money right now, they can loan money very cheap and not pay a lot of money. And this simply means that now the companies can do more with the loans that they are taking. The companies can do more with the savings that they are getting, because their repayments on their existing loan it's low. This is very good for the stock market, and to the consumers also. Like I said, now consumers have got some sort of money to spend, to invest into buying shares, which is a very, very good thing, which I think it's obviously good. So for the market, this is bullish. This is so bullish to the markets, which is why you will see that our market is on of course, a positive, an all-time high. Now, the also flip side of the coin is that, in as much as this is very good for for the consumers. But what it does, obviously, when interest rates drops down, it means that the buying power for consumers rises. And buying power, you know that it enables the consumers to be able to buy stuff that they cannot buy, which it brings demand in the products and services that we usually use on a month to month, which is something that triggers inflation. Inflation, you know that it's not a good thing, because ultimately it will take back the interest rates again up, as they try to, of course, bring down this inflation. So it is very important that, of course, you take cognizance of these things, and in as much as, yes, interest rates went up, it is something that, of course, it might be bad, it might be good, but of course it is more good than it's bad, right? And what you need to do is to, of course, invest wisely, boost emergency savings, because low rates won't last forever, right? So if the more interest rises, it also boosts your savings, right? So you can continue investing wisely and stick to your strategy, and you continue to, of course, boosting your savings account if you need to be, but ultimately you ought to be investing for the long term. Saving, it's only for a short term purpose, but this is a cycle, something that you need to take cognizance of. It's a cycle that usually happens, or it always happens, even if you check, or if you go and look, check on history. But anyways, I don't want to make this video too long. Tell me what you think about this. Like, share, subscribe, hit that notification bell. I'll see you on the next one. That is all from me, and God bless you all.